Quantum BioPharma, trap formed amid rhythm contraction. Is the swing reversal in sight? Hello, this is Jinlog, your top trader and market analyst. This video includes both technical analysis and strategy breakdowns. You can also find a blog format summary of this report for quick reference. Summary: Quantum BioPharma is currently in a rhythm contraction with a price trap in place, showing strategic opportunities at swing and mid-term price zones. Short-term trend: breakdown right pointing arrow trap at 0/3 phase swing trend. Maintained with rhythm contraction right pointing arrow entry range 17 to 18.82 midterm trend. Sustained right pointing arrow rhythm expansion right pointing arrow strategic entry at 15 pushman note. The short-term price target of 25 was reached on June 17th. Further movement depends on rhythm recovery. Investment outlook: short-term, trap phase active, re-entry only after rhythm recovery swing, trend intact. Monitor for rhythm and flow reversal midterm, expansion trend with potential for a strong move. Chart explanation: this is the chart of Quantum BioPharma. Past and current circled areas show trend merges and bullish structures. Entries near the swing or midterm lines are historically higher probability zones. Be sure to track rhythm and wave flow on each chart. Rhythm analysis: short-term rhythm. Contracting with 0/3 trap structure, direction undecided swing rhythm. Contracting but trend intact. Watch entry at 17 approximately 18.82 midterm rhythm. Expanding. Signals breakout potential if continuation occurs. Financial overview: zero revenue. Trailing net loss of $20.88 million. Debt ratio around 28%. Right pointing arrow financially stable. Cash burn Q1. OPCF $1.48 million per levered FCF $5.12 million. Subsidiary unbuzzed actively raising capital for pipeline advancement. News, risk, events: June. Private placement led by insiders. MVS shares. Subsidiary unbuzzed launching Reg D funding pre-IPO. Clinical progress on Lucid MS and FSD 202. $700 million class action lawsuit over alleged market manipulation. Crypto assets $4.5 million held for staking and yield generation. Strategy scenarios: checkmark short-term buy strategy entry zone. If recovered, 20.5 to 22.2 condition. Trap phase cleared 2/3 plus rhythm recovery plus supply flow reversal. Checkmark swing buy strategy entry zone 17 to 18.82 condition. Trap 2/3 resolved plus rhythm and demand flow shift. Checkmark midterm buy strategy entry zone 15 condition. Confirmed rhythm expansion plus strong accumulation flow. Elliott wave analysis: current position. Wave 2 corrective phase scenario. Entry build up before potential wave 3 wave interpretation. Wave 1 peak 25 already reached. Wave 2 pullback zone 17 to 18.82. Wave 3 target 30 to 35 range possible. Community sentiment platform keyword sentiment summary: Reddit $QNTM. Lucid unbuzzed optimistic plus cautious. Insider buys seen as positive. IPO hype growing. StockTwits #QNTM, #FSD 202 trap focused post 25 drop caused caution. Awaiting reversal. Twitter $QNTM. MS drug hopeful plus volatile. MS therapy hopeful but short-term dips expected. Forecast and risk summary. Forecast: potential for breakout if wave 3 begins. Risks: clinical failure, delayed IPO, lawsuit outcomes. Supply demand, insider-led capital inflow. No major institutional accumulation confirmed. Tech indicators: rhythm recovery is the key trigger. Advanced report: institutional flow not detected. Social mentions: Reddit mentions up 130%. Short interest not disclosed but spread widening detected. AI flow models: weak inflow post-June, recovery expected in July. Legal notice: this report is based on the VPAR rhythm analysis system. All rhythm, flow, and scenario interpretations are for educational purposes. Investment decisions should be made at the sole discretion of the investor.
Welcome to the deep dive. Today we're cutting through the noise, really getting into a fascinating and, let's be honest, pretty technical subject. We're talking about high-stakes investment analysis, specifically in the biotech world. Our source material for this deep dive is this, well, incredibly insightful investment analysis report on a company called Quantum BioPharma. It was originally put together from a video presentation. Our mission today really is to give you a masterclass in pulling out those crucial insights from what can often feel like, really dense, jargon-filled stuff. This report especially, it's packed with intricate technical analysis, financial snapshots, and even checks the pulse on community sentiment. We're going to break it all down to understand what it's really telling us about Quantum BioPharma and, what that might mean if you were thinking about investing.
Yeah, and what's truly fascinating about this particular report and kind of why it stands out is how it just seamlessly blends the traditional financial reporting. The numbers we usually look at for company health with some very specific, often quite nuanced technical indicators. And then it even weaves in social media sentiment. It's like a really holistic view from a unique perspective. As we unpack it, you'll probably have several of those aha moments, Seeing how different data points converge in this complex world of investment. We won't tell you what the numbers or charts are saying, but importantly, why they matter and how they connect to broader market movements, hopefully giving you a uniquely holistic understanding.
Absolutely. So whether you're really deep into biotech or fascinated by the art and science of stock analysis, or maybe just curious about how to make sense of incredibly complex information, this deep dive is definitely tailor-made for you. Okay, Let's roll up our sleeves and really dig into Quantum BioPharma. All right, let's ground ourselves first, the fundamentals. Quantum BioPharma basics. The report kicks off highlighting some pretty immediate financial realities. What's the core takeaway? Their current financial health. What's the very first thing that just jumps out?
Okay, the most striking point, and it's really crucial for understanding them right off the bat, is their declared no revenue state. And that's coupled with a quarterly net loss of negative 2.88 million USD. Now, for anyone used to looking at, say, established companies, this might immediately sound like a huge red flag, right?
Yeah, exactly. No revenue, big loss. Sounds bad.
Right. But for a company in biotech, especially at this stage, it's not necessarily a problem. It's more like it immediately signals that this is an investment in future potential, not current profit. It tells you straight away this company is deep in an involvement-heavy pre-commercialization phase. They aren't selling products yet. They are spending heavily, literally burning cash on R&D, clinical trials, all that expensive stuff. So for you, the investor, your focus shifts entirely. You're not looking at profit and loss like usual. You're looking at pipeline progress, cash burn rate, timelines for market entry. Those kinds of metrics become key.
That makes perfect sense. Yeah, it frames the whole company differently. But okay, despite those losses, the cash burn, the report mentions something intriguing about their stability. How can a company with no revenue and a net loss be described as, stable in any meaningful way? It sounds almost contradictory.
That's where context and specific financial metrics become absolutely key. And it's a brilliant distinction the report makes. The report states a debt ratio of approximately 28%, which it explicitly describes as stable.
Okay, 28% debt.
Stable. Right. It's a critical nuance. What it means is, while they aren't generating revenue from sales, their debts, their financial obligations, are manageable relative to their assets or equity. They haven't over-leveraged themselves. That's a good sign for solvency, short to medium term. They aren't drowning in borrowed money they can't service. Think of it like this. They're not earning income, but they also don't have an overwhelming mortgage payment hanging over them.
Okay, that helps clarify.
However, and this is important, this stability needs to be carefully balanced against the other side of the coin. There's a continuous operating cash outflow of negative 1.48 million USD and a negative free cash flow FCF.
Right, so they're burning cash for operations.
Exactly. Steadily burning through it for daily operations, salaries, lab expenses, development costs. Negative FCF means cash from operations isn't covering their capital expenditures. In Quantum BioPharma's case, since they have no revenue, all their cash flow is essentially outflow for expenses and R&D. So yes, stable in terms of manageable debt, but fundamentally, it's a company that needs ongoing external funding to keep going, which highlights that critical challenge for biotech, securing enough capital to bridge that gap between research and actually selling something.
So if they're not generating revenue from sales and they're consistently burning cash, how are they sustaining themselves? Where is the funding coming from to keep the lights on, run those expensive trials?
The report clarifies this absolutely crucial point. Their funding structure is centered on the pipeline of their subsidiary, Umbers.
Umbers, okay, that name comes up a lot.
It's the engine room, the core of Quantum BioPharma's value proposition. It means their financial future, their very existence, is tied up in the development, the progress, the eventual success of the drugs being developed within Umbers. Essentially, investors are betting on the future value of these pipelines, not current profits. It strongly suggests they've raised significant capital, probably through equity or venture funding, based on the promise of these projects. So for investors, the focus immediately snaps to what's in that pipeline.
Okay, so speaking of Umbers, what exactly is Quantum BioPharma trying to achieve through this subsidiary? What are the flagship projects mentioned, the ones carrying all this weight?
Right. The report explicitly points to Umbers not just as a subsidiary, but as the core strategic focus, and it mentions IPO conversion momentum.
IPO momentum. So they want to take Umbers public separately.
That seems to be the clear intention. Bring it to market independently. Could be a major liquidity event if successful, generating huge capital. And within Umbers, two specific drug pipelines are highlighted prominently, Lucid MS and FSD02. The report notes these pipelines are advancing in clinical trials. For a biotech, this is everything. This is the engine of value. Progress through those rigorous clinical trial phases, phase 1, 2, 3. That's what determines their potential future revenue and their current valuation.
Right. Each successful step reduces risk, increases value.
Precisely. So Lucid MS and FST02, those are the crown jewels. The reason Quantum BioPharma exists and gets investment.
You know, when I first read about their financials, one detail really jumped out at me because it seems so out of place for a biotech firm. The mention of digital assets and a lawsuit. How do these, like, unconventional things fit into the picture? They don't exactly scream pharma giant, do they?
No, they don't. And you're absolutely right to pick up on that. They definitely stand out. Indeed, the report states they hold 4.5 million USD in digital assets and are attempting staking monetization.
Staking monetization. So they're trying to earn returns on their crypto holdings.
Exactly. Locking up those assets to support blockchain networks, earning rewards.
Yeah.
It's highly unusual for a traditional biotech firm. It suggests they're either looking for alternative, maybe non-dilutive revenue streams, or perhaps their treasury management is just unusually innovative or speculative, depending on how you look at it. It certainly sets them apart, though it also adds this layer of non-traditional risk that most biotech investors aren't really used to evaluating.
Yeah, adds another variable.
And then, on a much more serious note, there's the 7 USD price manipulation lawsuit.
Right, that sounds serious.
It is. It's a significant red flag. Its mention immediately brings the integrity of past market movements into question. The report just says, lawsuit ongoing, no deep details. But its mere presence implies a potential risk factor any investor needs to consider very carefully. A lawsuit like that can cast a long shadow, affect investor confidence, reputation, could lead to big financial penalties, legal costs, entirely separate from how the drugs are doing in trials. It raises a critical question for you, the listener. How does this kind of legal issue, especially about stock price fairness, influence your confidence? How might it overshadow potentially good news from the labs? It's a fundamental challenge to trust, really.
Absolutely. Okay, so we've got the financial landscape, the core business, these unusual elements. But how does the market itself, with all its currents and patterns, interpret this high-stakes gamble? To answer that, the report dives deep into technical analysis, starting with something called rhythm analysis. Sounds like it's describing the company's pulse in the market, its heartbeat. How does the report define and use this rhythm?
Rhythm analysis. Yeah, it's a really fascinating technical approach. It focuses on understanding the underlying ebb and flow of a stock's price movement, looking for patterns of expansion and contraction that suggest where it might be headed next. The report breaks it down into 3 time frames, each offering a different perspective. It's kind of like anticipating the market's psychological momentum.
3 time frames, okay.
Right. For the short-term rhythm, the analysis notes a rhythm contraction and says the stock is in a trap phase.
Trap phase. Sounds ominous.
Well, imagine a spring being compressed. Energy's building, but the immediate direction is uncertain. That's the trap phase. It means, in the immediate future, the stock's movement is uncertain, probably moving sideways in a tight, maybe frustrating range. Suggests high volatility, lack of clear direction. The trap implies it might be consolidating, catching out both short-term buyers and sellers. Makes predicting the next big move very tricky.
So caution in the short term.
Definitely. A wait-and-see approach often makes sense there. Now, moving to the swing time frame, the rhythm is also contracting.
Still contracting.
Yes. But critically, the report notes that the trend is maintained. This is a subtle but really important distinction. It implies that while there's some short-term consolidation or pullback, that spring compressing the underlying broader trend for a swing trade, days to weeks, is still intact. The report even specifies a return possibility confirmed in the $17 to $18.8 range.
Okay, a specific price range.
Exactly. Highly actionable. It suggests that even with the contraction, there's a strong chance the price will return to or find significant support within that specific range. For a swing trader, that's a potential entry point. Looking for a bounce or reversal to kick off the next upward leg, it's finding where the spring coils before release.
Got it. And the third time frame, medium term.
Right. Looking at the medium-term rhythm, the report sees an entry into a rhythm expansion flow, which sounds promising, right?
Expansion flow. Yeah, sounds better.
It is. This is where the spring starts to expand again, hinting at a sustained move. But it cautions about outward spread movement and emphasizes checking for full trend development. So, potential for a larger sustained upward move, maybe a new, stronger trend emerging. But the outward spread movement warning suggests that while the rhythm is expanding, the price action might be a bit erratic or volatile initially. You need confirmation that a stable, sustained trend is really developing before committing for the medium term. It's looking for the start of something big, but, cautiously, avoiding false starts.
So if I'm getting this right, it's less about just reacting to today's price and more about seeing these underlying, almost psychological patterns, feeling the market's pulse to anticipate the next big beat across different timescales.
Right.
That's a different way of looking at it than just a daily chart.
You've nailed the essence perfectly. It's understanding the market's dynamic internal state. The report even maps these rhythms to strategic opportunities for swing and medium-term entry points. Specific price levels become important because of these rhythm patterns. For instance, it clearly states a short-term target price of 25 was reached.
Okay, so it hit that target.
Right. The previous short-term upward move hit its expected peak. Now the analysis shifts. The movement after that is interpreted as a return scenario, meaning after hitting 25, the stock pulled back. So the current rhythm analysis is guiding investors on when and where to maybe reevaluate or consider getting back in. It's a dynamic framework. Markets don't move in straight lines. They breathe, they flow.
Okay. Beyond rhythm, the report uses another cornerstone of technical analysis, one that often sounds pretty esoteric. Elliott wave analysis. For those maybe unfamiliar, what's the core idea behind Elliott wave and how does this report apply it specifically to Quantum BioPharma?
Elliott wave theory. Yeah, it can sound a bit out there, but it was proposed by Ralph Nelson Elliott way back. The core idea is that market prices don't move randomly. They move in discernible, predictable patterns or waves based on recurring fractal structures. It's basically a grand psychological framework. It suggests collective human behavior and markets' greed and fear cycles create these recurring patterns.
Mapping the market's emotions, kind of?
Sort of, yeah. It aims to interpret crowd psychology and predict future price moves by seeing where the market is in a larger sequence of waves. The classic structure is impulse waves, usually 5 waves going with the main trend, and corrective waves, usually 3 waves going against the trend. And each wave has its own smaller waves inside it, like fractals.
Okay, so how does Quantum BioPharma fit into that structure right now?
In this report, the interpretation is that Quantum BioPharma is currently in a Wave 2 correction flow.
Wave 2 correction. What does that mean practically?
Okay, so Wave 1 is the initial strong impulsive move up, driven by maybe new optimism or news. Wave 2 is a corrective phase. It often retraces a good chunk of Wave 1's gains. But importantly, a healthy Wave 2 usually doesn't go below where Wave 1 started. It's seen as a healthy pullback, consolidates gains, shakes out weaker investors, and ideally sets the stage for the next, often much stronger, leg up, Wave 3. So Wave 2 is a critical phase for savvy investors looking to get in or add to positions. It's seen as a potential buying opportunity before the next major move.
And what are the precise price implications? Does the report give us concrete numbers based on this Elliott wave analysis, something actionable?
It absolutely does. And that's why technical analysis, when applied carefully, can offer these actionable insights. The report gives clear, specific price targets for these waves. It paints a picture of potential future moves. It states the Wave 1 peak reached 25, so that initial surge hit exactly that level.
Okay, 25 was Wave 1's top.
Right. Following that, the expected Wave 2 correction range is 17 to 18.8. That's the current area to pull back we're talking about. The zone where the stock is expected to find support before the next potential move.
17 to 18.8, that's the correction zone.
Exactly. And here's the exciting part for bullish investors. If this Wave 2 plays out as expected, finds a solid base there, the report anticipates a potential Wave 3 target of 30 to 35.
Wow, 30 to 35. That's a significant jump from 17-18.
It is. In Elliott wave terms, Wave 3 is often the longest and strongest wave in the sequence, driven by broader market participation, growing optimism. It signifies a significant potential upward move if this scenario plays out. That's the big prize for those who position correctly during Wave 2. The analysis also suggests a collection zone formation before the Wave 3 entry.
Collection zone, meaning people accumulating shares.
Precisely. Aligns perfectly with the idea of astute investors quietly building positions during the Wave 2 correction, anticipating that big Wave 3 price increase. So, for you, the learner, understanding these technical patterns gives you a framework for anticipating moves, identifying potential entry and exit points. But it also really highlights the speculative nature of these predictions, right? These theories provide a roadmap, but markets are influenced by countless things. No single indicator guarantees anything. It raises an important question. Given the precision of these targets, based on this interpretive model, what other factors would you need to see to feel truly confident in such a forecast? It's not just lines on a chart, it's about confirming the story.
That's a great question, moving us nicely from theory to practice. The report frequently mentions a return scenario and specific re-entry considerations. What does that mean for someone looking to actually act on this info? Is it just about hitting a certain price, or is there more to it?
Yeah, you've hit on a critical distinction there, the return scenario idea. It implies that after a stock hits a previous target, like the $25 we talked about, it's pretty common for it to pull back. A correction. This pullback isn't necessarily bad news, like the rally's over. It's often a natural, healthy part of market cycles. And it offers a new opportunity for investors who missed the first move or want to add more at a better price. So the return scenario is about the stock pulling back to a point where getting back in becomes strategically viable, attractive.
So it's not just buy the dip blindly.
Absolutely not. The report specifically highlights that re-entry should be considered when the return conditions are met. That's crucial. It's not a blind re-entry. The conditions are paramount. It also notes strong return potential if supply and demand shifts are detected within the swing maintenance flow.
Supply and demand shifts.
Okay.
Okay, what does that look like?
It means you're looking for tangible, concrete evidence that buying interest is coming back, that sellers are maybe getting exhausted, that the market behavior confirms the technical signals. Like you might see selling volume decrease on down moves, buying volume pick up on up moves, or specific chart patterns signaling a reversal. It's about confirming the consolidation is truly ending and new upward momentum is genuinely building. Gives you a much higher probability of a successful re-entry, confirmation, not just prediction.
That emphasis on conditions is so important. Speaks to the discipline needed. Okay, the report then outlines distinct strategy scenarios for buying Quantum BioPharma, categorized by time frame. Let's unpack each one. Starting with the most immediate, the short-term buy strategy. What are the specifics and, crucially, those conditions?
Okay, short-term buy. The report identifies an entry range of 20.5 to 22.2. This is for active traders looking for quick moves. But as we just discussed, the conditions are critical, much more than just the price. The report lists them as trap resolution, stage 2 or higher, rhythm return flow, and confirmed supply and demand shift. Let's break those down.
Okay, trap resolution, getting out of that sideways phase.
Exactly. Moving definitively out of that frustrating trap phase. Stage 1 might be a small break, but stage 2 or higher means it's established a more definitive breakout, beyond just noise, confirms a real directional shift. Then rhythm return flow means that short-term rhythmic pattern, which was contracting, is now reversing and showing clear signs of expanding again, signaling renewed upward momentum.
And the supply-demand shift.
That means tangible evidence of buyers overcoming sellers, maybe increased volume on up bars, or sellers thinning out at key price levels. All these conditions together are essential for a short-term entry. Signals the immediate uncertainty is clearing, and renewed buying interest is real.
Got it. And for those looking a bit longer, more patient, the swing buy strategy, holding for days or weeks.
Exactly. The swing buy strategy targets the $17 to $18.8 range.
Ah, back to that wave 2 correction zone.
Precisely. Highly significant. Suggests this is where a pullback might find strong support, a healthy correction within a larger uptrend. The conditions here are, again, crucial. Trap resolution, stage 2, and supply and demand shift flow formation, which would then open up short-term return possibilities.
Oh.
So you're looking for a bounce after a more substantial correction, where the stock is reset and new buying interest is clearly forming to push it higher for that swing trade. A more deliberate entry after a dip, aiming for the rebound.
Okay. Finally, the most patient approach, aiming for the bigger wave. The medium-term buy strategy. What's the plan there, the entry point?
The medium-term buy strategy. This one looks for an even lower, more patient entry at $15.
$15. Okay, that's the lowest point mentioned.
Right? Very patient, potentially high reward, targeting a longer-term trend. This entry is contingent on specific powerful conditions. Early rhythm expansion, and concentrated supply and demand inflow, which could lead to trend expansion potential. This isn't just about a bounce. It's about catching the very beginning of what could be a significant, sustained upward move, that big wave 3 scenario. Trying to get in before the broader market fully recognizes the new trend, maximizing potential upside. Concentrated supply and demand inflow would mean seeing large blocks of buying, suggesting maybe institutional accumulation or a big shift in conviction. It's the most aggressive strategy in terms of anticipating a major foundational shift.
Wow, okay. So 3 distinct strategies, each with very specific conditions, not just prices.
Exactly. The distinct conditions for each strategy are key. It's not just hitting a price. It's the underlying market behavior confirming the opportunity. This level of detail really emphasizes that successful trading or investing, especially using technicals, needs more than just watching numbers. It demands a deep, nuanced understanding of market dynamics, the confluence of indicators. It raises another practical question for you, the listener. How do you actually verify these trap resolutions or supply and demand shifts in real time? It highlights these aren't set-and-forget strategies, right? You need to be watching.
Absolutely. Okay, we've dissected the company's internals, the chart predictions, but no investment exists in a vacuum, right? What does the report say about the broader outlook, the external risks that could derail even the most perfect technical setup, and that subtle dance of supply and demand that truly moves markets? Let's start with the human element, community flow. Sentiment from places like Reddit, StockTwits, Twitter. What's the vibe there? Are people optimistic? Cautious?
It's a fascinating mix, actually, which is pretty typical for a stock that's seen big moves and is now in this kind of complex corrective phase. On Reddit, the sentiment is generally described as optimistic and decentralized. The report notes insider buying is interpreted positively. That's common. Retail investors often see insider buys as a strong vote of confidence.
Makes sense. If the insiders are buying.
Right. There are also high IPO expectations for Umbers, aligning with the company's strategy and that potential big liquidity event. Keywords like QNTM, Lucid, Umbers are mentioned a lot, showing high engagement. And it's quite telling. Reddit mentions increased 1.3 times compared to institutional supply. Suggests a very active retail-based driving discussion, maybe ahead of or just differently from the big institutions.
So Reddit sounds pretty bullish overall, driven by insider confidence, future hopes. But what about StockTwits and Twitter? Same vibe or different takes? Maybe more cautious.
On StockTwits, while there's definitely robust discussion, you see hashtag QNTM, hashtag FSD02, there's also a noticeable increase in trap mentions.
Ah, the trap phase again.
Exactly. And concern about a sharp drop at $25. Directly linked to that short-term target being hit and the price pulling back. So many investors who bought near that peak might feel trapped or just waiting to get out even. This leads to many observing for reentry, suggests a more cautious wait-and-see approach after getting potentially burned by that volatility.
Okay, so StockTwits is a bit more wary. What about Twitter?
Twitter, similar complexity. While MS drug expectations remain high for QNTM and MS drug clinical trials are still anticipated, that reflects the long-term potential of Lucid MS, the optimism around biotech breakthroughs. There's also a clear caution for short-term fluctuations.
So long-term hope, short-term caution.
Pretty much. A blend of anticipation about clinical progress, combined with a realistic awareness of the immediate price swings and the unpredictable nature of these kinds of stocks. Overall, it tells us that even within the community, opinions and risk tolerance vary widely, from strong optimism about IPOs and insider buys to real caution about price traps and short-term volatility, especially among those watching daily prices. This connection to the bigger picture shows how sentiment, especially on social platforms, can amplify technical signals or sometimes contradict them. Adds another layer. It's a powerful, sometimes irrational force.
It's clear sentiment matters, but it's not just one voice. Now, pulling back to the broader view, the overall outlook and the risks that could seriously impact Quantum BioPharma. What does the report highlight as the big potential opportunities and, crucially, the major pitfalls you really need to be aware of?
Okay, the overall outlook presented is, I'd say, cautiously positive, especially if that Elliott Wave 3 scenario unfolds. It anticipates strong supply and demand expected upon Wave 3 entry, meaning if the stock does enter that powerful third wave, significant buying interest large, sustained capital inflows are expected to drive the price higher. That's a bullish view based on the technicals and pipeline potential.
Cautiously positive, but the risks.
The risks. They are significant and absolutely crucial for you to consider. They include the possibility of clinical trial failure.
The big one for biotech.
The biggest, arguably. Common but devastating if it happens. Even promising drugs can fail late-stage trials for safety or efficacy reasons. That can just destroy value overnight. Another major risk, subsidiary IPO delay. That directly hits the Umbers IPO conversion momentum we mentioned. Delays tie up capital, extend that no revenue state, kill investor enthusiasm, patience wears thin.
And the lawsuit.
And the lawsuit outcome variable. That's a huge unpredictable unknown. That $7 price manipulation lawsuit could result in massive fines, reputational damage, legal setbacks impacting finances, and critically, investor trust. These are external factors outside the lab that could dramatically change everything, no matter how nice the charts look. They're the potential black swans.
Those risks are definitely sobering, especially trial failure. It's always the elephant in the room. And on the actual mechanics, the buying and selling, what's the report say about supply and demand factors? Who's buying, who might be selling? How's that influencing things?
The report offers some really interesting insights there. It notes continuous insider fund inflow. As we said, generally seen as very positive. Those closest to the company believe in it.
Right. Insiders buying is usually good.
Usually. However, on the flip side, institutional buying is unconfirmed and negligible. That's significant.
Big money isn't in yet.
Doesn't seem to be, not in a big way.
Yep.
Large, sophisticated institutional investors, mutual funds, pension funds, hedge funds, haven't committed significantly. Could mean lack of broad conviction, skepticism, or maybe they're just waiting for more certainty trial results, lawsuit resolution before deploying big capital. That absence of institutional backing can limit upside momentum and might signal caution to others.
Interesting dynamic. What else on supply demand?
Furthermore, it mentions an undisclosed short-selling ratio, meaning you don't know exactly how many people are actively betting against the stock. That can be hidden, selling pressure, create instability, and continuous spread widening. The difference between the bid price, what buyers offer, and the ask price, what sellers want, is increasing.
Richie.
It can indicate lower liquidity, harder to trade large amounts without moving the price, can increase volatility for everyone. The report also mentions an AI supply and demand estimate, which is fascinating. Suggests a weakening after late June, but recovery possible in July. A glimpse into how AI is being used to predict market flows.
AI predictions.
Yeah, adds another layer. And finally, reiterating a point from the technicals, the rhythm return status is identified as a primary buy condition, underscoring its importance in actually triggering investment decisions. Shows how technical signals merge with broader market dynamics.
So what does this all mean for you, the informed learner? We've just taken a really deep dive into Quantum BioPharma using this very specific, highly technical investment report as our guide. We've seen a company that, yeah, it's burning cash, but it maintains stable debt. It's pinning its hopes squarely on promising drug pipelines, LucidMS, FSD02, all while navigating this unconventional digital asset strategy and a serious looming price manipulation lawsuit. It's a complex beast, lots of moving, sometimes contradictory parts.
And we've absolutely explored the intricate, almost artistic world of technical analysis, haven't we? From rhythm, contraction, and trap phases signaling current uncertainty, to Elliott wave theory's precise predictions of a powerful wave 3 surge, maybe to $30, $35. But that's contingent on a successful wave 2 correction settling between, what was it, $17 and $18.8. We've seen how these technical signals underpin very specific short-term, swing, and medium-term investment strategies, each with its own precise conditions for entry, emphasizing that timing and confirmation are paramount. It's way beyond just a price point.
And perhaps most importantly, we've seen how external factors layer onto this complex picture, from the diverse, often contradictory sentiment bubbling up on Reddit, Twitter, StockTwits, to those critical, potentially catastrophic risks like clinical trial failure, IPO delays, pending lawsuits. It's a perfect, almost textbook example of how you need multiple lenses, financial, technical, qualitative, to truly understand an investment opportunity. It stretches far beyond just a simple balance sheet.
Which raises a truly important question for you to consider as you process all this. In an information-rich world where incredibly detailed analyses like this are out there, how do you personally balance the precision of technical indicators and hard financial data with the often unpredictable nature of external events and shifting, sometimes irrational, market sentiment? What stands out to you as the most compelling factor here? Or maybe the greatest unknown? Is it the huge promise of a successful drug pipeline? Is it the stark warning of that ongoing lawsuit? Or is it the intriguing precision of those technical targets? Something to think about.
A profound question to ponder as you reflect on Quantum BioPharma and its place in your own investment thinking. Thank you so much for joining us for this deep dive into the rhythms and risks of high-stakes biotech investment. We hope it's given you a shortcut to being well-informed and maybe sparked some new curiosities for your own exploration.